Good afternoon, everyone. It's 5:02 p.m. again on a Wednesday. That's March 30th, 2022. Tomorrow's end of quarter. This is another of our weekly webinars on market timing. And we haven't done so well this last week, but I'll get to that too. Just a couple of real quick housekeeping items. We finally released the 4.4 to elite members. Here's the history of it. We've added the history of it. It's the first button on the products page, and the what do you call it? The back tests are done 1 minute and 1 tick for 6 months. We're trying to get 1 tick data for full 12 months from TradeStation. It's not open normally, but I've been with them for a while, and we have a lot of customers there. So hopefully, as a reseller, we lease indicators out to TradeStation members, and so hopefully that would give them an excuse to say, yeah, let them have 6 months. I used to have 2 years. Something's going on with their data, and we had to stop everything not for trading, but for back testing, because we couldn't get the trading is real time. That's nothing to do with data. It's coming in tick by tick. It's the back testing where the bar is complete, and you need to know within the bar what happened. You can't just go open, high, low, close if you do system design. Anyhow, system is doing good. It's about, if you can see up there, given the margins are up now, this is the 1 year. It's about a 7 to 8x, 7x to 8x. So between 700% to 800% return. Now, as you can see on the charts here, it's not a straight line. Nothing is. It's not a B line. Take from A to B. It's somewhat is like FAA. You want to go from here to Dallas, you may have to go through Charleston and go to Dallas. I mean, it got a little, but you see the green dot. That's every new high on the equity line. So overall, does very well right now because the walls are very, very high. It's getting to an issue. As the walls come down, because we can't stand these high walls anyway, a lot of people get blown up, and then the market goes back to be a low vol. And as they have to resolve the issues with, let's say, Ukraine, with the oil, with interest rates, then we go back to a regime where this is really good. Now, we have reserved the right to tweak these. I think there was a write-up we added. I want to make sure everybody reads that. There's no way for us to backtest market texture. What you see on the chart is history. It's already happened. So, but what we could do is provide a baseline, and then occasionally we may have to tweak it at the margin a little bit. We have done small tweaks here between like 2 and 3, but 3 to 4 was a additional logic to better keep what the number hits. What the max number MAE max. MFE max favorable excursion happened to keep it, which is also these charts. If you download these, you get a full set of data. Oh, I'm sorry, right here. Full set of data in a format they provide MHT. You just use a browser, and you can go to these charts, and you could see including percentages. Oh, there are like 20 some charts there. I've just put a few in for you guys to catch your attention to see what kind of yield it is. Throw that away. If you have a huge return one time, you should throw that away, or huge loss. Something else went wrong. But look at this, very consistent, very consistent. That's how you get to these numbers. Look at the monthlies. Now, one issue. These are 22s, and then goes to 21s, right? So it's going backward. So, yeah, February was very difficult for everybody that I know. Even in ES systems were bad. But this is how it usually returns. Fairly consistent. Okay. So we'll see. We'll see. So we've been very cautious, trying to handhold people during the chat room, and also give them alternate trades or trade in the afternoon when the system stops, because the system only works 2 hours a day. Okay. So that's out. The software key for elite members also went out. As you know, we got the basic and the elite. The software key for that went out is for each month. So for April is out. So we don't issue a key yesterday. I mean, software yesterday, and then a key tomorrow. And then this morning we issued the key for our experts. I mean, sorry, happy pro and happy expert indicator set. not a strategy, but indicators. So they're two different animals. The other products don't have a key, so you just get it from the website and email base, so coming to you. Great. That's housekeeping. Version 5 is in the preliminary work. Gamma ladder is finished. Gamma ladder has been extremely well. We're testing it more and more. I think here we talk about it. It's been very expensive to bought. We have not convinced ourselves that's really ready for prime time by end user. It's a major problem. On December 6th, I got the first copy. The idea hit me on the 3rd, which was a Friday, non-far. That's the day this this software made 88% in 2 hours. I came up with this idea. By Monday, I had a little bit of alpha working copy. We have a very good programmer. He really needs this stuff. He really knows TradeStation. And then recently, on March 14th, we got the release copy. We have not given out yet. We're debating. Mainly problem is the downside risk. If you don't know what you're doing, you can blow up your account. Basically what it does is a buy and sell button on your system. Automated, but multi-layer. It layers it in, up, and it takes it out, and runs the money management behind it. Because it's dangerous, you need the money management on the back end. So it always keeps, and it uses data from the TradeStation itself, from your DOM, from your matrix. This way, it knows exactly what you have on the table. Okay. And you obviously have to log into you have to put in the account number. Yeah. So anyway, I'm not sure we'll have that out to anybody. There's one person I have in mind that she would qualify, but she's an outstanding trader and system builder. That's different. For the average guy out there, this could be a disaster. So if you people said, I'm waiting for that, don't wait too long. We don't come out at all. Yeah. It is. And also, it's an edge too. I'm going to be in New York for meetings with some hedge funds. I don't know what that would entail, but possibility if these guys big come in, they just want me to do anything anyway. I mean, gotta get off the retail business. Yeah. So we'll see. Money talks. As my EXO Admiral Tico says, show me your American Express Platinum card, then we talk. So anyhow, let's get started here. As always, we do our housekeeping. Let's go to calendar, econ calendar. ADP came in today. Has anybody looked at it? I missed it. I want to look at GDP. Hold on. Okay, now I do these live with you guys. There is no script here. I may have a few. I've written here SQ, Larry. Couple of points I want to talk about, but I don't do a marketing schmanzy, fancy stuff with the audio and this and that and editing. It is what it is. I don't have that kind of time, so I just get in and it's raw. If it's a mistake, there's a mistake. But I will go through it, and we don't edit. We immediately post it up, and that's it. It has worked for us for I don't know since December of 2007. No need to change now. 475 prior. There was revised up. That's a good sign. 40 to 86. Consensus about the same 438 area almost. It came at 455. So the numbers are slowly upticking. That's good. That's good GDP. Remember, that's a red report. All the ones with a red report, you need to take a look. They're crucial. Yeah, it missed 7 months. Okay, it came in 6.9. Okay, yeah. That would ease up a little bit for Comrade Powell. And PCE came in at what? Even also 2.5. Okay, that's annual. Yeah, that's good. That eased up the pressure on the Fed to act immediately, or a 50 and 50, which I've been pushing for. 50 into a meeting, on Zoom. Give me 50 on Zoom, 50 in a real meeting. I think they're still doing it by Zoom, too, even the real meeting. Yeah, they're actually a scheduled meeting. Yeah. Okay, so those two. Anything else I want to look at? No, I don't care about EEI. No, this is all BS there. Consumer confidence, let's talk about that. That came in yesterday. Okay, it was a tad better than expected, almost unnoticeable. But look at the trend. Okay, look at the trend. Boom, boom. So we actually dipped first, and now pulling up at that. This is actually the lower this number is, the bullish it is, because of contrarian mode of that time series. When consumer confidence is way too high, Watch out. Watch out. That means everybody's brother's getting bullish. And so it's time to hit the other side. Yeah. Hey, Dennis, how are you? Let's look at JOLT. Now, I'm not an expert on JOLTs, but I've been trying to get myself more assimilated. 263, 283. Okay, that's revised up by what, 20,000? Okay. 11.1, that's consensus. Came in 11.2. Yeah. 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 It's just it's a monthly changes in job openings. Okay. Yeah. So we have about 11 million jobs that are not getting filled. There's 4 million people who left the job market or quit. I'm sorry, at least quit their jobs on February 4 million. Yeah. I don't know how to interpret it. You go and interpret it. I have no clue. I'm not an economist, but these data points we need to just be, connect in our head what's going on. Oh, tomorrow there's an OPEC meeting. Lovely. Jobless claims. That I watch every week. Wow. Wow. Okay, it's ticking down. Uh-oh. Okay. I don't know what the new oil prices are. What that do? We'll see. Okay, personal income. That's for tomorrow. So there's no data here yet, but that's the range. I expect that to go up 0.25. Yeah, Jesus. Okay, hold on. PC price index in line. Year to year 6.4. Okay. Core PC 0.4. That's a slightly lower. That's slightly higher on the year to year. Okay. We'll see. But I think Bernanke used to look at PCE quite a bit, according to his own admission. Okay, PMI, I don't care. We got to see what Williams has to say. It's head of New York Fed. Okay, let's go to, before we go to employment, let's look at, first of all, construction spending. Should be marked a little bit higher. We'll see. Marked up. We'll see. 131. Really interesting. We shall see. That's the number you want to watch. But it's an hour and a half after the non-farm, assuming that we're still in the market. Yeah, I've had messed up on the non-farm. This is doing a backlog. Let's do that. It's doing a backup. All right. Yeah, I've had mess up in the non-farm, so you have to be careful. Be nimble. I mean, the way it's turning out right now, I'm going to be coming in very small because one of my goals always is to go home positive for the weekend, and occasionally you miss it. When you do, you're going to have a miserable weekend. And but you have non-farm, it's possible. You get a little cocky early on, you do good, then you put a big bet on, and boom, torpedo comes. And just to be nice to you, they send you a second torpedo at 9:30. So you got 8:30 and 9:30 torpedoes. So my solution to that is don't jump in front of a freight train. A, B, trade very small. Once it shows its hand what it wants to do, and the BLS data is downloaded enough people are looking at it. That's probably like 9 o'clock Eastern, 10 off, something like that. And one test is you go there to BLS yourself. You can't get in. You can't get in, that's too early. But let other people get it, realize it, go through it, and then we go, and then we can trade a little bit better. Yeah. Remember, ORV does not kick in that early, but we have our very reliable, extremely useful the derivative of double CI, which is DMZ, demilitarized zone. Those will help us in the morning. That's all we have. There's just volume and price. There's no internals. So that's a tough trade, but you just have to be very careful. And use statistical measures like sigma channels. Once you got out of whack, get out. Don't sit there and hope and pray. It doesn't work on non-farm, remember. Okay? So I did. Let's see. Let's go. Let's do ISM quickly. I don't care for PMI, but let me do ISM here. That's the Reds report again. That is, they think to be expected. That okay. What time? That's 10 a.m. also. Okay, these are 9:45, 10. Let's go to the Big Daddy here. Come on. Okay, here we go. It's just data's coming in. Let's do it in the background. All right. Last one was 678, was the big surprise. Oh, wow. 155. Look at that range. Nobody knows. This says nobody knows. So bring your dice. Yeah. We may have to throw a dice before, yeah. I usually post the number, this box, I put with the logo, obviously, as a respect for the copyright. And I asked, what's your estimate? You should see what the answers are. It's unbelievable. Like 2 minutes to 5 minutes before the number comes out, just to see if people are in the loop or not. For me, private work, network, payrolls are crucial. Obviously, manufacturing. The healthcare is not here. For that, I go to BLS if I can get in. I'm looking for an average work week. Do I get an uptick in that or not? If that isn't, there's a pressure on the payroll, on the actual earnings. So, all right. So 155. Oh Jesus! Holy macro! Look at that range. Okay. All right. Not gonna make a political comment or anything else other than it's really post-COVID. The economy slowly is trying to get back onto normal at the margin. So it's not going to be constant. It's not going to be same place, same area. So I look at Dallas. I look at Richmond Fed, and I look at Philly Fed to see what the data is. So gives you a feel about the activity of the industries we're involved. All right, let's go to charts, guys. The charts were updated. We're good to go. Sorry, I just messed up something here. Where did it go there for? No, I don't want to go there. Here we go. Okay, that's the chart we want to come back to. Let's make that, and then we get to it. Yeah, that's no 150. Okay, there we go. All right, let's clean that. Let's go to charts. Okay, now I've kept this for a comment because there's been a lot of questions on this, tremendous questions on this. Hold on, and the problem is people want a quick answer. Hold on 1 second. Let me get a little air moving here. The tab. Okay. The problem is you got to read that darn thing, and it's a work by Paul Desmond. But we'll get to it's like SQ. There's a lot of questions on SQ, but nobody's willing to read the damn report. Well, that's not good. Or the white paper on it. Now, granted that for some of you, that could become what do you call it? A cure for insomnia. Okay, that I understand. Hold on, is this? No, that's not it. This is reserve. Hold on. Yeah, there we go. That's what I want. Okay. Yeah. Yeah, I have a few white papers printed, ready to go next to me. If I don't understand, I can go back and take a look. Okay. So, 2 items we're going to talk about: SQ, and we're going to talk about Lowry. Okay. And I'm not an expert in either of them, by the way, but as a practitioner, I've used them quite a bit. But let's start with Tyron. Okay, I was dead wrong here, and the problem is that the MWDs with Putin in the corner. There's a possibility we're one chemical canister away for everything to go crazy, and I misread the call. But the indicators were right. If you look at the indicators, they did right. You had a cross there. This was not extreme. There was not a bullish divergence here. You can't see it there. There isn't. Why? Because this wasn't tested again. So because the walls are too high, nothing was here orderly. And I'm not trying to come up with an excuse. I'm just saying this would happen. But with the NDX hitting 200 a day, that's very positive. Very, very positive. Now remember, this is rear view mirror. We don't have the luxury of knowing this data in advance. But good bounce, no question. Walls have come down. If you look at here, walls have come down. I think we're at the low today, well, for the year, I believe. We're there. We'll get into that too. So we're slightly overbought. There's no question. You can see these. Of course, the first one doesn't mean anything. You can continue to stay up here. Remember, bottoms are much easier to spot. Tops are formation. So there's by no means this means the top. I'm waiting for it to short again. Why? Because I think, I could be absolutely wrong. I still think that we haven't seen the low. I'm going to show you why. And this is on very low volume. That's the hallmark of a dead market, bear market rally. Yeah. Very low volume. There's no flush. There's no capitulation. And so, good run. Good run if you take it. I know some friends who were like, what do you call it, on Tesla. The news of a stock split took him out of the toilet, basically. Took him out. Boom. Out of the toilet, and then they flushed the toilet, right? So he's out, right? Yeah, he's lucky. So they've got some reprieve. So we'll see. I just don't know how do you look at the stock with 147 PE and say it's going to go higher. But they have in the past. So, but the problem is they weren't this big. Law of large numbers. So that's a separate issue. You could see that we're beginning to get really soften up at the margin, again, at the margin on the CI diffs. Okay. Canaries. Okay. Again, this was a big bar. Haven't seen anything like that. It's pretty much sideways. ES doesn't go anywhere without transportation support. So really not much, but so far it's trying to hold to his 1 sigma. If it can stay in that channel, it could get a breakout. We'll see. Before this goes up, this better go up. Russell better go up before transportation. Why? This fuels NDX. And because of the top 7 to 10 names in NDX, also happen to be in SPX, one runs ahead of the other. This was utilities that says the rates pulled back. We're going to get to that in a second. The trender. Okay. Now we're getting some positivity. The trenders. We have what? 2 negative? Yeah. And they're correlated. Remember, we talked about Russell and NDX. So we're still on a dead cross. So is this one, but shape is getting better. Okay. This one did not cross at all. So that's encouraging. We were very, very close to it, but they pulled up. So the trender, for simple explanation, is a tool that's used for very, very large portfolio managers. They look at it as let's go to here, as a rubber band. This is a good example for Russell. They have historical values. That's a 35% move from where this high is versus where the corresponding 200-day is. So if I go here, that's what it is. You can write the code. It's very simple. Price minus 200-day of that bar. Boom. Okay. And then you plot that to see what those max and minimum points are. Observation point. There's no set limit or what it should be. There's no definition. It's all empirical. That's all observed. Okay. Hey, Emma, how are you? So usually Russell is a big one. Transmission is another one that over time can give you that level. When we do the charts on the PMT, underneath them are those levels historically, what has happened in the last 5 to 7 years. So you could see what is normal. Okay. So I think I forget which year it was. It was a year back. Maybe it was 2000. Let me see. What did we have in 2000? Hold on. What's going on here? Okay, 2000. Okay. Are we not going back enough? I think it was 2000 that the data went nuts. Hold on. Let me see. 2 years back, make it 4. Okay, so hold on. Okay, that's 19. No, you can see the drop there. Okay, this is 20. No. Yeah, this is 20. Yeah, this is the big drop. You see that was abnormal, but you could see the effect is you see where the rubber band is stretched. and you get ready for making a major commitment. It's for major people who make major commitments, and you could see we're too far up. Now you got to look at historical terms. So you want to go back and you see where it could go. Obviously, when it gets pulled down this heavy, it's skewed a little bit, but it'll catch up. It'll catch up and become normalized. Uh, we just look at it as a percentage basis. Okay. So far, so good. All right. Let's get to more complicated items. S1, Momo. Here's S1 and here's Momo. If we pulled up, good divergence here. This was probably the best tell that I did not pay attention to as much as I should. Coming down at the lows, remember, look at extreme lows versus the extreme lows here. This is the younger brethren of Momo. It switches faster, okay, so that you could see if a slow versus fast in the context of Sigma channel. Pulled up, and now it says we've been overbought. Usually, you don't get a reading up there. You could go to sit up there. When you exceed that, you may get one more, and then we drop, or we start dropping. Except you're on the bottom. You get one or two on the bottom, then we go up. These are negative 10 and plus 10. It's normalized within range. I think negative during 2020 drop. Hold on, why is it not letting me go back? Okay, so that's 21, 20. Okay, you could see where we went. Yeah, this was like negative 15. Yeah, negative 16. Negative 16 down there. So I mean, you don't forget these days, but this thing just really went down. And notice how early that went down. See that? When it hits that, you know it's coming. We still have not dropped much, but you know this is big. Look at it. And remember, we went short here. Well, not I. Admiral Tico did. It is infinite wisdom. The 9.5-pound blonde said, "Daddy, we gotta go short this market." And boy, was that a call. Now look what the reading was. It starts pulling up as we're still dropping. Does it confuse you? Yes, confuse everybody. But you could see also the angle of this the SP1 changed. You can think of it as an instantaneous slope. Remember, I'm a derivative guy. I look at the slope of a slope of a slope. Okay, it starts changing. You know, okay, somewhere in here we get into a bottom. Thus, we looked for a date, and this was a March 20th. You know, the spring equinox, Persian New Year, whatever you want to call it. That was it. It hit it there. 2 years later, we have the same issue right there. Right there. I'm sorry, right about here. Here's what happened. The accuracy is +1 to maybe, I'm sorry, plus or minus 1. Maybe plus or minus 2. These are calendar days. Weekends don't count. This was early, 4 days early. Came out of nowhere, 4 days early. So I think my room is bugged. That's all I know. Probably Goldman put somebody here. Yeah. Maybe the last time the AC guys came in, they actually were working for Goldman. They put something in the roof or something. Maybe there's a camera. Remember what was that movie? I forgot. They put a camera in there. Oh. Gene Hackman was in it. Yeah. Was it Enemy of the State? Whatever it was. Yeah. With Will Smith. I think that's what it was. Yeah. Yeah. The infamous Will Smith now. Yeah. With Gene Hackman. Yeah. He was a NSA guy. Yeah. So yeah, we gotta watch. It's just funny. We say things in the chat room here. 10 minutes later, it's on CNBC. It just happens every so often. I think the room is bugged. I don't think so. It's the chart. There are a lot of people look at these charts. You know, if you've been around long enough, you learn what the other guys are looking at. So that's how we do collusion. Okay, our collusion is by charts. There's no emails. There's no text. Those are dangerous. We do not use burner forms. Yeah, exactly. Just throw that in. I know Dennis would love that. So yeah. So no, this is somebody figuring out what we're doing. All right, let's look at here. We're getting tired here. Rally up, speaking. No, it's not high enough yet. So I wouldn't necessarily go crazy. It's the first high. We're going to get 2 or 3 highs before tops. So now, this is chart-wise. Remember, news takes over everything else. News doesn't care whether your indicator says or my indicator says. It's a freight train when it comes in. As I said, we're one chemical canister away over major disaster here. And I think the more data comes in, how badly the Russians have done, This is the military. We may see a reaction. I hope not, but that's what I'm seeing. Just from my training in military stuff. So, anyhow, we had a huge run up here. That also said we're close to a low, and we were. You can see that big boy. That was a huge week run up. And this one worked, not as big as it should, but it would work. It should be a little bit higher, but it was a pretty strong signal. The weeklies you could see. You see what I'm saying? Yeah, you can see where the you see 22 years ago where it was. This is 2018 where it was. So you gotta get over into 3 digits. We never got there. What is it this high? 85, 87? Yeah. These two are classics. So if I'm right, between issues coming at us, for example, this new variant, if and the Fed and Comrade Putin, it's a trifecta. We could be a lot lower than these by, let's say, end of this quarter. Remember, we're finishing just one quarter. By this coming quarter, by June 30th, we could be a lot lower. So, and I've heard a lot of estimates are saying that. Notice we were not that far off. We start talking about here of March 20th for our time cycle. We were not off. We were 4 days off. But up there, people were laughing at me. What? Yeah, okay. Recently, I had dinner with a couple of those characters who were laughing up here. They were fairly quiet, yeah. Even though we run up. But remember, during you see, they had a couple of mini heart attacks. Okay, when you're long 7,000 shares of Tesla, yes, yes, and you get down here, yes, you're gonna have a couple of mini heart attacks. And what hedge? Oh no, I don't need the hedge. Oh, that's too complicated. No, no, no. I'm in it for a long run. I'll sit through. Really? They were puking here every day. So, again, having said that, let me jump forward first and we come back. There's no puking. The puking is defined by 2 90-day back-to-backs. We don't have it. Not even 1 90-day. Not even, you didn't even touch 90. Okay, here's the low there, right? The very last low. Reading was 83. Here was the initial move. This is the night of the attack. Okay, now the futures obviously were more impacted, but this is the day session only. You could see that Lowry. Now, how's Lowry computed? Lowry is simple. You have two outputs: up volume, down volume, on the same scale, except you plot one of them at any given time. If the up volume is bigger than down volume, then you plot it on top, which is up divided by up plus down. So bottom of the denominator is always up plus down volume. The top changes. On the top is up, the bottom is down. Are you with me? Do I need a chalkboard? So up divided by sum of up plus down volume. That's for up here. Down here is down divided by up plus volume. Now there's going to be some unchanged. We don't worry about it. Throw that away. Okay. It runs daily, but we can also run it short term. I usually post it on the Twitter at Hamzy Analytics because I want to see the shape of it. Let me go to 30. Let's go to 30. I want to see. I'm sorry, not the shape of it. I want to see it develop throughout the day. So 1 second. Let me go to 30. Okay, now that's fine. I don't need to bring any moving averages. This is good enough. All right. But this is what I want to see. What's happening throughout the day? This is a crazy day. Back and forth. Back and forth. That sort of thing. Usually, you want to go to one side and then go to an extreme. I haven't done that. Has not done that. Boom. And the closing value is the most important one. Why? Majority of professionals make their decisions in the last half an hour of the market. That's after reports are done. All their analysts are reporting called back in because they send people out there to look at these companies. Oh yeah, there's a whole army of people supporting their big hedge funds. Econ data is out of the way. The folks on different departments of state and defense and White House have done their boo-boos on Gamma. And then they've walked it back, as we have seen recently. So we would get that net where we are. That's where they make a decision. So today we closed negative 57, negative 65, negative 71. Again, SPX, Russell, and NQ. NDX. Now, most of the work has been done on SPX. Why? That's 80% U.S. equities. It's the benchmark. It's a 500 best name and going concern. Not all the companies are good. They're going to fall behind, won't even include it. Most of it stays done by, let's see, Paul Desmond of Lowry Research is on SPX. But because I look at all these three and the data is available, this is up and down volume for NDX, up and down volume for Russell. This trade session has these time series. It's good to see the relationships, and you could see, for example, how this moves a little bit ahead of it. The Russell does. Yeah, Russell usually leads NDX, and then NDX leads SPX. So it's kind of seeing the progress of data. And I posted. Now I'm not an expert. If you want to have experts, I would suggest you. Let's see. Go to TweetDeck. I just posted it here. Let's get out of that. There we go. Yeah, not SQ. There we go. There you go. Follow Norseman One. Great guy. Absolutely great guy. This is down the street from me. Actually, he's the one who asked me to get into it. Notice they tried to hack him. That's how good he is. Yeah. And then Walter Deemer has been around the block billions of times. This guy is very down to earth. He's got some good books posted if you're interested. Old timer. He's come and seen a lot of things. He does this by hand. He does this calculation by hand from Wall Street Journal. So we just run this live. Okay. All right. So you should follow them. They're good. I have no financial interest or business interest with them. No, none. Not with anybody. Not with anybody. Not even TradeStation. We don't do that. No. Okay. All right. I'm not licensed. I want to keep it that way. Not doing anything fancy. No, it's not worth it. It's not worth it. Once you have a system that's working, it's not worth it. Yeah. To have anything else. If you have indicators that are working, yeah. Stay clean. Pay attention to what you've built and move forward. Okay. Vols. All right. You can see a little perspective there. This is 2020. So this is the annual. We're almost there. We're almost getting down there. Okay. On a closing basis, I think we're not that far anyway. So it's 17. All right. Now watch out. Anything below like 17, now we're getting really fluffy where we are. Yeah. Let me go to weekly because that's I'm more used to look at this. But I used to teach volatility at CIVO. So okay, you could see sigma channels, right? You could see them. We have not seen in this leg. We have not seen anything high. That's a fourth sigma plus. It's an inverse asset, so you have to look at the other way. Look how we put the bottom in 2020 March. So to me, we haven't done our homework here yet. It is the bottom. It will come. The issue is what's calloused. Yeah, it will come. So it's not if, it's when. Okay. That's SLK. Yeah, this is the Meg delivery, correct. And Admiral Tico is saying, I have a chart here. This is the futures. Yeah. Admiral Tico is saying, Daddy, I think we're going to be over 125. I said, I know that, but you told me once and we got there. Relax. So let's see if we go there a second time or not. Now, tomorrow's OPEC. We'll see. The way I would approach it, I would pick up the phone, call up MBS over at Riyadh and say, that's a Crown Prince of Saudi Arabia, he's basically running it. And say, those F-15s that you need to protect you against the Iranian aircrafts and this and that. Every 14 landings, they need a new set of tires. And guess who only makes them? It's Bridgestone. The chemical the composition of that tire is classified, and the type of a steel core that goes around it is that's only known to a few people. And if you want us to get you more tires, don't forget with at least 1 million barrel new day. I would twist their arms. He wants us to forgive him on killing of Khashoggi, dismembering Khashoggi. No. Just remind them, it's their 15 tires. They should get the example. Yeah. Okay, hold on. So we talked about these. We're good there. Yeah. This is I did not see it yesterday, by the way. That last night. I was trying to get the software out. Was a personal event in my life. I was worried about that. or preoccupied with that. I told my dad. All right. What do I see here that's worth looking at? Yeah, this is level. See, this is rotating already. Yeah. Okay. Little doji there yesterday. Forget today. Yesterday. So that one day doesn't make a market. I realize that. Let's see. We're not gonna go to SQ yet. Let me keep that for last. Here's treasuries. Okay. Hallelujah. Look, this is new highs for 2 years. Look what it's doing. Just completely went nuts. We're going to be a different. Notice where it stops. Okay. It retests and goes up. Obviously, we have one more day to go. On Friday, we're going to get new levels. Why? These are monthly charts. I'm sorry, daily charts are the monthly support and resistance. Here we go. Monthly support and resistance, SPR. Support, pivot, support, pivot, and resistance. We already passed like 4. It's more than 4. We almost hit 5. Okay. This should go up to. This is what the FOMC controls. These they control indirectly by purchasing their positions, but they've said they're not going to be going to be tapering it. So the yield should go up. This is 30-year for pensions, pension funds, long-term obligations, mortgages, cars. They're all gone up quite a bit. Now, here's what this is going to cause a problem. I don't see much problem from the mortgages yet. Okay, I see more on the price data, price expectation of the real estate, especially in the places like down here, where everyone has come down here, especially post-COVID, and they're not going back some. So there's going to be some dislocation here. This is a different story. This is subprime of the cars. You know, I forgot the numbers are now because the data constantly changes. But it's, I don't know what the number is. It's huge of how much they're behind. Now, I don't know what the moratorium is doing on the repossessing, I'm saying. But the subprime loans, which were created during Obama to protect him for re-election in Michigan, Ohio, Chicago, Wisconsin, Minnesota, that area, were suppliers to the auto industry. They created subprime loans. We're coming out of subprime real estate. There's subprime loans for cars to make him qualify so that they keep the factories running. We're way behind. We're way behind in these loan payments. There's some large factor of it. I don't know what to say because my data is old. If my memory serves me right, a year ago there were like 25% past 90 days. So by keeping the repo man away, they still held the cars. At some point, you can't offer that. You can't. You gotta say it's like the rentals. Evictions are going to be effective. This is going to cause a problem. You'll see. Not tomorrow. Not yesterday. Not next week. But somewhere down the road, this kind of rise is massive. I'm interested to see what these levels are going to be on Friday. It would be at I think early morning. Yeah, because these are post at 5:20 New York. I mean LA. So I was an ex-bond trader. 5:20. So 8:30, 8:20, 8:20. Yeah, 10 minutes before non-farm, your new levels will be plotted. Why? Because tomorrow's 31st. Month is over. All I did here, by the way, for these, I added a calendar in there. The only thing I changed it, there was a value here because these formulas are posted. Actually, this is my book. What we added was the calendar. So automatically, it has a perpetual calendar built in. It's not a calendar you have to upkeep. Very, very clever, these Americans. I know. Yeah, we're so smart. China owns half of us. Yeah, sure. Tell me about it. Yeah, that's all we did. But I want to see, and it's based on the prior month activity. It works like a charm. Okay. Actually, a fellow on the floor taught me that also. Now, for daily, we modified it because TradeStation at the time was the only platform that would allow you to do a mix of daily charts on a data that goes back 1 month. That's a high and low stuff. Without running a fancy schmancy subroutine. It does it on the fly for you. Okay. So and then again Eastern will follow. But this gives me these levels were based on this operation. I cannot wait to see what based on this move, what the corresponding levels are going to be Friday morning around 5 minutes before the number comes out. Yeah, so tune in. Yeah, we use it on the chat room too. We have this chart is also shared on the chat room. We look at it a few seconds. That's all. I bring it up, make attention audio, and then we go in there. Okay. We did talk about that. We're good there. Okay. Notice we returned at the sigma levels. Yeah. Yeah. 30 minutes is very popular with big guys. All right. Let me go to SQ. Here we go. SQ. Okay. Now we're at 130. By the way, on our home page, you go there. There is a preview page that still not going there. Is this not flushed? Okay. Well, let me go to oh jeez, where is that? Okay, so hold up. I gotta go back a bit. No. Sorry. Okay, let me go back on the calendar. Let's go back here. Let's go back for a while so we can have the. I know I have that chart posted. Oh shit. This is easy. Wait a second, guys. This is yeah, damn it. This is from what do you call it? Amazon. I know. It's the access level from Amazon. They haven't fixed it yet. Okay, no worries. Let's do this. First of all, let's go to CME. No, I'm sorry, CBOE SQ white paper. There we go. You read my mind. There we go. Okay, this is the white paper. That's it. Okay. This is what I want to show you. You should download this and read this if you want to understand SQ. If at worst case, it's a cure for insomnia. Have it on your nightstand. Yeah. There we go. You want to take a look at this. This is the page. So page 8. Page 8. This is what you want to look at. Okay. We are at what? 140? Is that today's? Hold on. Let's refresh. Make sure we have. Is it today's? Because it takes an hour to post. Yeah, looks like to me it's today. Yeah. Yeah, that's today. Okay. We're at 139.28. Let's say 140. Here's the white paper. This is the URL, by the way. If you can't find it, let me know. I'll email it to you. All right. So we're at almost 140. We have a 13% chance right now to move to sigma level, and only 2.5% chance to go 3 sigma level. Why? It's high up there. Now, what does it mean? It's out of the money. Okay, it's out of the money put spreads for the big boys, the SPX. So we're not extreme. Why? We are between 1, between 2. That's why I started a big conversation on Twitter. Well, reasonably, again, because also Norseman follows this. Actually, I got him started on this one. He got me started on Larry. I got him started on SQ. Sure, not a problem. Yes, Mohammed. He asked, can I get the URL? Yeah, sure. No worries, sir. Yeah, that's fair. There we go. Listen, for a small fee, we do anything. There you go. Post it. You should have it right now. Not a problem. There you go. Yeah. Good suggestion. Appreciate that. Okay. We're at plus. The trick is I have done is that not, and that's not covered in that webinar, in that white paper. I have it printed out. It's right here next to me. Because it gets complicated during the day, and there's something you want to take a look, you go there. I'm giving you the easy part, the cursory, wholesome part. It gets dicey. Yes, of course, yes, of course, yeah. But I do email anyway at the end of the night for the webinar. I'm just of the posting and all that. I'll remind you this on the YouTube. It's just easy for me to add one item, and we do that occasionally. We have some items we use as appendix, yeah, to share, yeah. My mom, most of my family have been in education, in capacities, like PhD candidate professor for PhD candidates in electrical engineering, like waveguides. Very, very complicated. Wait. I couldn't even read it. Forget about teaching it. But they've taught me one thing, Muhammad. You can't take your brain with you either. Okay, so if you can teach others, you live through them. So anyhow, this is what I've added. This is what I have added. Okay, the Sigma channels, and of course I had to go and find out what rules I'm going to put on it. One of them is also draw the all-time high. All-time high. The limits are you see in that panel in the SQ. By the way, so much I know. This was developed by SIBO, Admiral Esposito. I've known him since 2003, 2004. This came out about 2009. It's post 2008 debacle. I know a bunch of the guys over there who are on the product development side, on technical side. Like for example, when they put VXN together, one of the people they consulted was me with what my VXN looked like, because the code is available, you can run it, but you see measure it. For this one, I was a practitioner test driver type of deal. After they're done, then we went to beta. I was not involved with alpha. We went to beta. They give you access, and basically, this is the end of the day. So they give you Excel sheet. Yeah, you can download it on a secure page, and then you go with it. And the guy who told me I should be looking at this quickly was head of Vol at Citadel, an Indian fellow from India. I said, "Fine, you got to take a look at this." And now he runs a pretty decent hedge fund. But long story short, so I went to Admiral. I said, "Admiral, I need this." He goes, "Well, I'll make a call for you." And they'll put you on the list, and they look at you. I said, "It's easy to look at me. I teach over there. I teach volatility over there. This is a skill." So it was a done deal. Within a day or so, I got to start getting data. So I've been looking at it since early 2009. Worst time, because at that time it was very tough to do research. The market was so turbulent that you were totally exhausted by the end of the day. You weren't sure you're going to have liquidity next day. Yeah. And I used to trade at night a lot of times, so it was just too tough. But anyhow, this was a key item to look at. It's the out-of-the-money tail risk of SPX put options. What is it used for? Large fellows, they start buying up here. You see that's high reading? They start buying up here 2 to 3 months forward. So I use, for me to see what high means, is not the absolute value. That means nothing. If you wallow, if you read the book Derivatives by Bob, not Bob, Dr. Robert Whaley. Let's just be fair. Dr. Robert Whaley, the guy who did the original VIX. You'll see that he talks about intensity. He said his thesis is you can't look at VIX on its value. That's just very rudimentary, childish almost. What you want to look at is intensity. That is, how is he doing these shock waves? The intensity. What's the best way to measure that? You got to measure it against itself. So you put a Sigma channel on it. This is Bollinger Bands expanded. You can do it yourself. I'm not trying to sell you an indicator. You can get it yourself. Just try to have to modify, do multiple Bollinger Bands on top of each other. Go from the initials are 2 and -2. Go from 1 to 4. Okay. So you just multiple Bollinger Bands, so to speak. Just change the inputs. Look at it. Put it on this. Put it on this. Now, if you're doing something like a spread, that's a different problem. That's not that easy. Okay. But because that's a spread itself. It's not a single value. It's not a symbol. You have to compute that and then put Sigma channels on it. Anyhow, what this does to me, it gives me that sense of intensity that I'm used to because I've been a student of volatility. I mean, look, I learned Black-Scholes from Jack Shelton, the guy who did Black-Scholes a year ahead of him. Yeah, he was my professor at UCLA. So when you go to intensity, Sigma channel is the best thing. In a way, it's wall of the walls, if you think of it this way. I mean, this is purely, this is wall of the walls. It's volatility of VIX itself, or VXN, or VX for Russell, or VX for crude. So, except this is using USO as constant value. They should really use futures, but Breaker wouldn't let them. SIBO. This is a fight between SIBO and CME. Don't go there. Back to SQ. So, look what it did. And now, my work shows, and that's the part that's crucial to the folks who are asking questions on the Twitter. I told him, come here, I explain it to you because it's not something I can put on a bunch of tweets. Plus, I'm running a business here. There's a hedge fund. There's a trading for the folks in our chat room. It's not easy. But if you go back here, you would see that it exceeded its design limit. Design limits for negative 100. I mean, on the downside was 100. Negative, never negative. But on the downside, 100. Upside, 150. Well, you can tell we're way above that. Now I'm trying to get there quickly. That's 20. Okay. One more year, guys. One more year. Okay. Okay. Okay, there we go. I want to see this contract now. Okay, now here is the 2018 where we dropped dramatically. This was set in motion here. Look at that. In August, it changed one level. It's like an orbit. It changed one level at 3 sigma. It made a new high. Okay, that's just plotting. Don't worry about the. That's the painting of the HDA. The display is painting that, so there's a vector. It goes above it, but that's a value. It's a high, almost 3 sigma, 2.5 sigma. That set it in motion 6 to 8 weeks forward, potential of dropping. And we just dropped. Bear market rally dropped. Bear market rally dropped. Christmas Eve, I'm covering. Okay. This day, I think that day I made 22% on the account. 22 on that day. One day. Yeah, it was. This was wild. And once you get your confidence up, it's in control. You just push it and you get lucky. So again, one of these days, smaller days, I get into trouble. So it does happen. You can't just win all the time. So I give some of that back. Nice run up, but when we were gliding down negative 2 to 3. But look what it did. It gave a signal early. Now let's move forward. December 19, 4 sigma. Guess who caught that? The little 9 pounds here. Yes, Admiral Tico. Yes, the blondie. Daddy, we need to sell this market. I said, yes, I know, but when? Because, well, something is going on. So I'm out of town here. Come back. I'm out of country here. Come back, and I'm told, Goldman tells me, call CDC. Here's the number. 2 words. 2 words only, right? Chemical reagents. And this started. So now this is point 2. Item 2. We're getting a little bit more. Come on. This is last year. I'm sorry, this is last year. We're coming back. Hello. Now at June starts spiking. Now, 4 to 6 weeks forward, we have a little drop there. Nothing big, but it did. This was more closer to 4 weeks. Okay. And there was a spike there. Couple up here. Really no spike. This is not a valid signal yet. This doesn't fall in that category. We did not go to new high. We did not hit 4 sigma or even 3 sigma. We were high up. But here's what happens. As we go up, they take in new positions. This registers that. So when this is dropping, that means they're cashing out. They're putting these new put positions on out of the money. They're paying pennies for this, or $1 or something. The trade we put on for this move was a 199 to 1 payoff. 199 to 1, yeah. So 5,000 would have been $1 million. Yeah. And we didn't get 199 to 1. We got 5 to 1. Duration was 10 days. 500% in 10 days. So it will not always work the way you want, but it's a very good tool to see what the big boys are doing, because market moves by the whales, not by mom and pop. Right now they're cashing out, and they already did. Down here they already cashed out. In that, if you look at that. So remember, rear view mirror though. So we look at this is how the data comes in. Remember that. So you don't see the rest of the charts yet until later in rear mirror. But that's what SQ is. Again, tail risk, S&P options out of the money. Usually 3 months duration, 3 months expiration. Yeah. They can't move on a dime. They're not. And these positions are big. You can see it in the OI. You can see they're verified in the OI. Okay? Okay, let's go here. Okay. I have not seen the spread. This is the, what do you call it? The spread this low for 3 months forward contract of, I would say, 3 months spread of two contracts, the current and 3 months forward. I believe we're using April. Yeah, we have to be using April because March is over. April and July. And remember, this expires about 3 days before indices. So we roll the Friday before. So the day that we roll over on the end of a quarter, and the end of a quarter is easy. As a reminder, if you're changing the symbol from like H contract to M, it's time to roll also your spread for the VIX futures by 1 month. You don't do it 3 months, you do 1 month, but with a spread of 3 months. So in March, when we rolled on the futures contract of S&P, we rolled the VIX futures from March into April and covered the short June, and we shorted July. So it's 3 months forward. That delta we plot, and we put a sigma channel on top of that, again, to measure what that shake is. And this is hourly. I haven't seen a value this low in a while. Yeah. As a matter of fact, this was torpedoed, this calculation torpedoed by COVID. By 2020, let's say let's say this time in 2020, it was going wild already, because now it was clear to everybody that we got a problem, we got a major problem. It's not gonna go away. I'm saying, yes, the yellow line is yes 0. Is a sigma, yes sir, 0 Bollinger Bands, multiples. Yeah. So sigma chart. So that's 20 bar, 1, 2, 3 sigmas. Yeah. So you have 7 lines instead of 3. Yeah. The trick is not that. The trick is what the rules. We have built up the rules of what happens when you get in the channel. Let me. That's what the value of sigma channels is when you're in the channel. There's no discussion of that in Bollinger's work. And John knows. I've told him. I took him to lunch. This is what I'm doing. He goes, "What?" I said, "I'll mention your name, but this is my work. I'm going to do it because you don't sit down and do it." He goes, "Yeah, I'm busy." I said, "Well, that's your problem, not mine. You gave me a good idea. I'm improving on it." So I used the generic word sigma because that was from statistics and goes back 400 years from basically Ottoman Empire. They came up with it. The Ottoman Empire was very good in statistics. Not that they did a good job running an empire, but that's how it is. It's flattening out. Yes. Bravo. Yes. So if it starts turning, then we should shoot down. But remember, Roger, it's inverse asset. So when we're going down, market is going to go up. When we're going up, market is going down. So if it's flattens, now that transition goes through this flattening period. Except the value, this is fairly low. And the low values. Now, I used to have a page. I don't know what's going on with politics of SIBO. It used to be here. It doesn't show it anymore. Let's see what lows. I don't know what it lows now. It was it would take the SIBO blog that talked about my paper about this, how to use its thing. According to SIBO, it was a single article. It was see, it doesn't even show up. It was the highest read article, even more than what do you call it? Larry McMillan, who would write every week. He basically writes every week on the how do you close on Fridays and then a little bit of English on it. I don't know what they've done to the blog. Okay, they still follow me on Twitter. I'm still in touch with those guys, but they said they're going through some transition. The head of the SOSNet, the social networks, left. Holly, she was a pretty smart cookie, but she left for better pay, and the whole thing has gone crazy, But that posting showed our actual trade of how we took. Oh, I should replace this. It's going nowhere. Yeah, I'll change that link. I gotta have Larry look into that. But basically said, how do you take this kind of a data? You think what value you have? Is it very negative, which means that you're toppy? And what do you do at 0? in the past, when you hit the zero, it was the low of the market. Okay? Doesn't happen now. We have a shift now. This low happened at what? 3? That's a huge shift. $3 in the spread is a huge shift. Now, how do we come up with that? Right here. It's called term structure of the volatility. So you look at these. These are the VIX futures. All you're doing is subtracting these numbers. I don't like to do things by hand. I'm not good at manual labor. Yeah, I write a code. Let the code do it for me. Takes the error out. So yeah, I haven't done a wash in 30 years. I don't know how to do manual labor. Yeah, just buy more new clothes. No, I have mates, but you buy new clothes too. Like right now, my mate quit. I just found one that will come in Saturday, but in between, I just bought new stuff. I don't have time for that. So remember that what's his name? I know you have a question. Let me finish the story. George in Seinfeld, his plan was to have 365 underwear, so you do a one wash a year. So yeah. So I wrote a routine to plot that. It's much easier. It takes the error out. Computers are better at it. My job should be on creative stuff, not the manual stuff, right? Let the machine do manual. I gotta spend time on the creative stuff. Question: do you consider market reports to place? Do I what? Do you? So do you consider market? What do you? I'm not following what you mean. What do you mean by market reports? I want to make sure I understand you. My dad was a counterintelligence officer. I want to make sure I understand the question, sir. But you mean like economic reports? Oh, economic reports. Yeah, of course. I look at that, but not to place a trade. Not a short term. No, not short term. I have one of the best indicators in town. And battle tested for 20 years. Why? There's none written by outside. I wrote myself. That's why it took me a long time. Because what I found if you go to, let's say you go here, okay? You hit add, you go to studies, add indicators. Here comes the list. Now look, ours is all happy, okay? But they have a lot of indicators there. And they're available and they're free. What does that mean to you? They're junk. I've lost too much money on those. So I started writing my own. There's a lot there, but if it's good, why they're not charging something for it? Remember, these were a different business model too. They will sell. You will buy a software for $1,800, and you get the data from eSignal. That's how they started. So these all came for it one time. $1,800 you buy one time, no monthly payment, no commission because you're not trading with them. They're another broker. And you get it. And these indicators were there. The same indicators till now. They just rewrote it better to be able to compile and work better on the new platform versions. That's all. I mean, if you go back and look at ATR versus then, it's the same code, except what? Both of them are wrong. They didn't even bother to fix it. No. We issue our own ATR code for our members, yeah, because the math has to work. I'll tell you what's wrong with it. It's recursive. It's looking at itself. What good is that? If you look at yourself, it's a circular loop you've created. Very dangerous in your coding, yeah. Very dangerous and also in the results. So, no. So I look at our indicators. We have different. I mean, I'm not showing what we have there. Hold on. You want me to show it to you? Sure. Okay, this is another chart. This is our OTF chart. So you'll see how this manipulates that. You can see it by block trades. Boom, 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 boom. Okay. You could see how we look at it. 2 of them are for NQ, 2 of them for ES. And you could see the turns. And remember, these levels are there as each tick comes in. These are corner probabilities. It goes there and turns. Why? It understands fear and greed. So if you come to our chat room, I can give you a comp. You can come and take a look at it for a short term. Longer term, no, I don't look at the data and the news like that. I'm sorry. Let me come back. On the shorter term, those news are crucial, like economic news, because it creates a burst, but I have short-term indicators to catch it. On the longer terms, I use longer-term trades. They're 2 different developments. And for those, I don't look at the news anymore. Why? Because they're already embedded. All right? The news comes, for example, news comes. There's a reaction. The reaction prints. The other side comes in, takes the other side, kills it, comes back, goes back up, then slowly goes to lunchtime, comes back in the afternoon, settles the number. The result is done. The money has spoken. So daily trading is very difficult. Longer term is much easier. And for those, I just look at typically Sigma channels. I'm saying this is one of the other one I like, SP2. This has not been doing me wrong yet. There's no diversion here yet. I was hoping to see diversion. We don't have it. So this is not a high either. We're still struggling here, but this is very good for bottoms. This is excellent for bottoms. SP2, I wrote this back in 97, 98. Just modified to accept color when the code changed at trade station. This is newer, of course. This is not mine. This is just I wrote the code. Stock RSI code is published by Two Chart Chandy. This actually gave me the impetus to trade to program CI. Stock RSI probably the most publicly available code for zero lag indicator for momentum. Okay, for momentum. Yeah, and by doing it 3 times, you could see the rendezvous points. We made our rendezvous. What did I talk about last week? I said we hit the rendezvous point where they get up here together or down here and together. 2 conditions: they get together as below 10 or above 90. We met that. So next leg is down. So. You talking about when you say it's down? You mean the spread? You're talking about the VIX spread? You say it's down, yeah, because I don't know what it means. Yeah, remember, I'm not a mind reader, right? Yes, absolutely. Why? It's inverse asset. Remember, we have asset classes: bonds, commodities, currencies, and equities. The 5th one is volatility. This is part of now. Volatility is the inverse asset. Yes. So when it's down, market is going up, and vice versa. Yes, absolutely. Yes. Yeah, if you actually, yes, yeah, reverse assets, best way to keep it in your mind. Yeah, just trying. I gotta keep it simple for myself. Okay, so that's where I put it. Good question. All right, anything else? Oh, yields. Oh, well, we talked about yields. Sorry, we talked about yields. Up and on volume. Now let's see what this does. Now this is not my work. This is actually our moderator is very smart. So our moderator's work, Peter Cook. When you come to our chat, you will see it's just something else. I just after 2.5 years, I just met him this past weekend. We went up for an air show to see F-18E Super Hornets, and then we had dinner. He wrote the code. I'm not allowed to distribute it because I haven't asked his permission. I'm sure he doesn't mind. The problem is these. These are not easy. You gotta get this input in there that comes out of a trade station. I don't know if anybody else even has it. Again, if you watch what Larry Research did, they're really premier house. They're out of, I think, Tampa. Paul Disman has passed away, but I knew him from LA. Used to come to our mask user group. Very, very fine gentleman. And it's top-notch research. The one I am talking about is, hold on, Murray, hold on. Somewhere in here, let me go here so I can find it. One second. I'm not gonna go to my file structure on the webinar. That's not very advisable. I have been hurt before. Oh yeah. Hold on. Oh, that's not it. Hold on. Is this downloads? No. Hold on. No. Hold on. No, this could be in our docs, right? It should be in our docs. No. Hold on. Okay, I can catch it somewhere else. Hold on. Let me get that. On the Larry. I want to post that for you guys too. You should read that. It is on our server. I'm gonna give you the URL. Hold on. It's on docs. Hold on. Okay, I did it. Fine. There we go. I put it on. What do you call it? I put it on Twitter before. But let's see. Here, this is the. You should also read this. Okay, this is no, that's not it. No, that's not it. Hold on. Copy. Hold on. Let's do a fresh one. Hold on. Okay. No. What is wrong with you? Oh, I know. I've got to extract that from Amazon. Hold on one second. Sorry, I wasn't extracting it. Yeah. This is the code there. So copy to clipboard, put it here. Yes, yes, that's it. That's it. This, you should read this. There we go. Identify bear market bottoms and new bull markets by Paul Desmond of Larry Reports. You should read this. I'm going to go there and put it on the parts there for you guys. Hold on, let me post it there for everybody. Paul Desmond report. Okay, second link. So that's what it is. By the way, if you want to hang around, I can analyze some trades for you guys if you like. We used to do that. We missed that. Yeah, based on what the charts are doing for individual name. Okay, that's the one you want to read on Paul Desmond. It's very useful. Now, this is some of the additional work they have done, and you could see, you get an aggregate feel. It did turn, not bad. Yeah, yeah. Hold up, let me come back here. I'm sorry. Who is he? So he should again. You got to speak very specifically. My background is Navy. You will last with me a few hours, maybe a few minutes. Yeah. So you got to speak clearly. I want to make sure I understand the question, sir. I'm not trying to be difficult, but I cannot assume anything. Hold on. You mean you're talking about my guy? Yes. Yeah. Peter Cook. No, he doesn't. This is daily. But it gives him a sense where we are. He's trading 3 minutes there. But you see how good he is on 3 minutes. Using it's been, before I put him as a, promote him as a webinar moderator, he was with me 2 years before. Using our indicators, using our chat room, and he was sharing what he knew. He was so good, I told him, stop paying me. I want you, come here and be a moderator. And then he's very good. Yeah. Peter Cook, very smart guy. His profile is on the chat, on the box there. You could see what he has done on our website. If you go there, if you go here, you'll see there's a markup, there's a product right up on him right here, Peter Cook, this guy. Okay, very good guy, very good. He knows his stuff. Yeah. And he says last 2 years he's been with. This is at least a year ago when he came in there. So he's been with us 3 years. Yeah. Yeah, it's very good. It's very good. Yeah. I'm very humble, down to earth, likes his baseball, things of that nature. Yeah. He just drinks his beer, likes his baseball, normal guy. Can I talk about VIX Daily RSI? Okay, I missed the first part of the webinar. Okay. In case you already discussed, I appreciate your work. No worries. Okay, no worries. No worries, Panini. Yeah. Hey, I'm a normal guy too. Give me the baseball, give me the beer, but add a blonde. Don't forget the 3 B's. Yeah, beer, baseball, blonde. Okay, I'm 3 B's type. No. Now he's married, so we don't go there. We don't discuss that. All right, you want the VIX? Can you know about the VIX Daily RSI? I'm not using RSI. What do you mean by RSI? I missed the first part of the webinar. In case you already discussed it, no worries. Could you explain what you mean by RSI? I don't have RSI here. RSI is not, it's too slow. I have CI here. Why would I want to have RSI? Are you talking about a stock? Are you talking about a stock RSI? Is that what you're saying? You're talking about this part? Stochastic RSI? Maybe that's what you mean? Yeah. Index 920. This one, this should be, yeah. That's not, no, yes. It's a stochastic RSI. This is done by Tushar Chandy. It is, you can read about it in this book. If you can find it, please give me a copy too. No, I have mine, but it's rare to find. Suggested readings, this one, Tushar Chandy. It was that book that taught me what I'm missing in an indicator. For if I'm doing if I'm a follow through indicator, I'm like a turtle type. I need to have that. I need to read that book. That's also done by John Wiley. Tough guys, yeah. Go under suggested readings on the drop down menu. There's nothing in it for me. I'm not involved with it. It's just, this is a problem here, guys. This page needs to be updated. I'll have them update the drop down menus. There's a mix there. We have if you go there, it's right there, suggested readings under about. And so Read the book if you can find it. I think you can find it on Amazon in a used section, and keep it close because I mean, like they're stolen from the web from libraries. Just nothing. You can't find it. It's so difficult. But such a good analysis, and also shows you. Oh, I'm sorry, not this one. I'm sorry, this one. This one. Yeah. This one. I'm sorry, this one. Not the other one. The other one is system trading. Uh, sorry, I'm going to take that later. So hold on 1 second. Hold on 1 second. Hold on 1 second. Let me respond. Busy. Okay. All right. So I'll call her back. That's a contractor. All right. So read this book, The New Technical Trading. This is very good if you can find it. I think you can. Oh, there's some used. Yeah, this is the book. Yeah, this is the book. If you read through that, the code for stock RSI is published there. Not a code. I'm saying the concept of how it's computed. I just wrote the code. I wrote the code, put it in TradeStation, and then we give it out to our users, saying, "Hey, this doesn't belong to me because I don't need that. I have my own indicators. But this is a useful tool to have as a confirmation of everything else. And you use the 3 lines for what I call rendezvous points. That means the 3 of them hit within a context of the overbought, oversold. If the 3 hit down here, it means nothing. So go up there, go down there. You could see how it cycles very nicely. Okay, so the dual still delta. What do you mean by delta? Option delta? What delta of what? No. I'm not doing options. I'm doing futures. Now, if I'm doing a PMT trade for you guys, yes, and more important, gamma. Also gamma. Yeah. Remember, I've got a mentor here called Mark Esposito. Yeah. Mark, 27 years at SIBO, one of the earliest DPM, designated primary market maker. Nigerians wouldn't dare to trade against them. He didn't have the money. You know who used to trade against him? Steve Fawcett, the guy who crashed, the $100 million man. Steve used to trade against Mark. Yeah. The Nigerians have no chance. Nigerians are kids compared to Mark. They're good marketing, but they wouldn't come to a pit against Mark. Now, he's in my chat room. He's my mentor. That's why I moved to Chicago. I knew nothing when I left LA. Okay? I've been trading. I've been doing options. I ran an option board, but nothing. What I learned in Chicago that 8 years is something else. That's one. 2, what I learned in the last 6 months on TradeStation on the API of how to execute is something else. Yeah. You have no idea what I've gone through the last 6 months in my head. My head has exploded several times each week because you understand now it's how the machine works. To the trading. You want a printing machine. You're printing dollars legally, right? And how to make it work. Now, it's tricky because you got to go through internet. So 7 hops between here and Chicago. For it to arrive at the matching engine of Globex, put the orders match, get filled. Yeah. And then upload back here, tell you what your positions are, what your stops are, all that. Yeah. What I learned that 6 was something else. What I learned in that 8 years in Chicago was something else. And listen, was baptism by fire. I walked in 2008, Super Tuesday. So it's February. Everything is hunky dory until about mid-May. You get a couple of bumps there. You're getting a little bit worried. Then you say, oh, okay, maybe just a little bit noisy here. Then the oil goes to 147 by what do you call it? By Labor Day. Okay, and then holy mackerel, they stop putting what do you call it? They stop you shorting the financials. Yeah, and so he told me, he says, Barry, they're going to stop it because you're officially market makers. The market makers have to know the feds are going to come in and stop the shortings, just like they did right now in Russia. You can't short certain names. I had the list. I teach over there. Oh, I have IDs from SIBO. I can have it. Look at those names, but bought calls on them. Yeah, I can do that. Yeah. I teach over there. I have ID. Yeah. And so it was incredible. So now coming down was unbelievable. Listen, I had put spreads on Lehman. At 21, we entered the put spread at 21. At 7, I couldn't handle it anymore. I said, let's book what we got. We went to 0. Remember, when you're coming down near 0, the math changes quite a bit. Try to do it. Try to put that into your black show. Yeah. So, what's the fair value there? Who knows? Would a $670 billion balance sheet go to 0 in a matter of days? Fourth oldest investment bank? Unheard of. So you get to a point where you don't know. You don't know what's going on. So we covered like, I don't know, September 2nd, 3rd before Labor Day. On September 15th, they filed bankruptcy, went to 0. Go figure. But I had a good teacher. Yeah, he was good. Yeah. And a good mentor and somebody I can go to and cry and say, I made a mistake here. What do I do? He goes, this is the solution, you schmuck. So, and remember, he's a Roman. I'm Persian. We took the last, We took the last emperor to custody. Yeah, Valerian. In 260 AD, Battle of Edessa. Go look it up. Yeah. So so I usually give him a hard time. I mean, I taught him trade station. He didn't know trade station. In exchange, he showed me so much about options. Yeah. But he used what's called trade station R, version R. It's for Romans. Yeah, it's a Roman version of trade station. It's Roman proof. Yeah. Any other questions for me? Let me ask you this, Roger. Why would you look at the delta when you're making a trade in futures or stocks? I'd like to know how you do it, if you don't mind. Not a trick question. Believe it or not, I learned many things from you guys. It's not a one-way education here. A lot of times it's two-way. Some of the indicators develop here is somebody's asked something. Turn on a light bulb. Is there a special way you look at delta? Or do you use gamma? Correct. That's true. Right. But how does it say? But that's instantaneous, though. Delta is constantly changing. Delta changes day to day. Right? Because the underlying is changing. Yeah. Right? And also, if you too far out of the money, that delta is very low. Right? If you're in the money a lot, it goes to 1. Yeah, right? So. No. You have to start somewhere. That's not we all have to learn. I'm learning every day. We all have to learn. That's learning. This business never stops. Yeah. If you're looking for learning to be, from this is class 1, and by 5 years I'll be there. Forget it. That's not how it works. It's event driven. Learning is event driven. That means you need an event to put you into a course to find out what's going on. Question from Mike Becker. How are you, sir? Nice to see you back. Okay. Question is, there's a rendezvous point at SP2 shows topping here, there, right? Yes. You have said we have not topped out yet. Okay. What I'm saying is that we have not seen the price to go there, but we're getting primed. Remember, these indicators, because of momentum, they should be at a price, right? So, yes, I'm looking at possibly putting something on tomorrow or maybe after the number. What you don't want to do is put a position into the number. So if I do a position tomorrow, has to be option. What's defined risk? I would put a spread tomorrow. Yes, most likely. We went a little bit above and pulled back from the most recent what we call local maximus. Okay. Now, but we are ahead of non-far. I cannot go put a futures trade on tomorrow on the short side. No, dangerous. But I can do a small, like a first tranche, putting my foot in the water of a put spread tomorrow, and then after the number comes out, after 8:30, or put another trade on, wait for 9:30, let the cash open. Remember, at 8:30 when non-farm comes, we don't have cash open. So the dumbbell isn't there, the second part. It could free to go either way, so that's dangerous. We would do it after the non-farm, let's say 10 o'clock on Friday. Now that's what I can push it. And even go and add to my option trade. By a factor. Yeah, I'll put a quarter of a position tomorrow, and then for clients, I would go out 3 times as much. Boom, boom. Because now we have full size, but not all of it tomorrow. That's just to catch the edge. What I want to ideally do, Michael, is to see an M. Just like you see a W here, you should see an M there. This was a very weird W. Look at that. If you look at it from a bigger context, in terms of like fractals, okay? If you look at it from a fractal standpoint, this was a very weird W, okay? The why? News-driven. This is the nature of a news-driven market. And so it also means, this means nothing. If you can dump, as I said, we're one chemical canister away for this thing to take out 4,000. So that would change the ballgame. Now, is Putin, here's the question, is Putin dumb enough to do that? I don't know. He shouldn't, but he's done a lot of dumb things recently, and now they're saying the military is not telling him what's going on. Well, wait a second. That's just, you're very dumb. What kind of military you have doesn't tell you what's going on. They're that afraid, fire him. You know, I mean, it's just, none of it makes sense. That's why it's very, very random. It's a random event in terms of you can't control it. You don't know what the observed value should be. It just shows up. Just like when this showed up on 24th of February, right? This is the 20. When this showed up, I remember that night. I remember that night very well. Nobody expected him to go like that. We know things were happening. Our CIA was saying they were going to do that. We didn't know that it's going to fail. That's what it means he failed. Okay? And or Soviet hardware would be that bad. I said so it is. I said on Twitter, I said on Facebook and LinkedIn, because I have some hedge guys who watch me only on LinkedIn. And one of them says, you're my military guy. I like your trading, but tell me what you think military-wise. And I said, Soviet hardware / Russian hardware is junk. Look at what happened. You see those T-72s and T-80s? Look like toys with a javelin. They look like a toy. So, yes, Roger, yes. If you have that's the whole purpose. You got to get into a trend before it starts moving. Yeah. Otherwise, what good is it? The price, you have to pay the price. You're paying somebody else's. Now, some people will just take a gamble, the specs. I know a guy here. He just sells balls constantly. Well, I haven't seen him for 2 months. I looked at him the other day about here. He looked awful. Because he sold balls here. Sold balls and balls exploded. So, yeah. So, yeah, you need to get ahead. Now, it's called leading indicators, Roger. You need to work on leading indicators. Moving average are passive. They're lagging. They're lagging, not passive. They're other phased by half cycle size. So 50 bar, okay, is behind 25 bars. 50 bar MA is 24 bars behind. That's the delay. 200 is 100 days behind. Is the days. So if I'm doing now, CI goes to 0. That's my work. CI goes to 0. See how where it turns? Where the turn comes, this thing turned. And it gives you a trend. Took me 2 years to write this code. It's 9 lines in it. 2 years it took to write those 9 lines. Yeah. Now remember, it's a high end. I'm saying it's a, what do I call it? It's a high level compiler. Okay, it's a high level compiler. So you don't have to do a lot of detail. It calculates, it does those for you. You just give him the just of what you need, and it computes it and puts it to you. But to fine tune it and get it ready and release it took us 2 years. Okay, to give you an example, in the last 6 months, the ORB system, okay, which is here's ORB system, the one that trades live by itself on 3 minutes, is 600 lines. Oh no, 680 lines, almost 700. And we have worked nonstop, 2 of us, last 6 months. Of course, I know a lot more about trade session than I did back in 2000. And it's a much more high level. We were version 10. Back then, I believe we were version 4 or 5. Yeah. I think 5. I'm not sure. Okay. 6 was the one data disconnected from eSignal and came in directly to them through internet. You need to look at volume too. Yes, sir. So you want, yes. This is yes, and you can see it. This is the delta between the two. CI and CI diff. Yeah. Again, go back and read this book. Read this book, to your chat, if you can find it. That opened up my eyes. It's written back in '94, and my best friend's dog almost ate it. If you look at the book, the corner of the book is chewed. I was ready to kill the dog. I was. And I've never done any harm to any animal, but this one, I was. You know what it took me to find that book? Yeah, it was out of print, and this dog. I mean, I was visiting Tampa, and it's a baseball buddy of mine, and I was in their guest room, guest bedroom. I get up in the morning. I hear somebody's chewing on something. I go out there. The dog had come in, picked up the book off the nightstand, and took it out there about to chew. I'm glad I didn't have a gun. You can't mess around with my books. Yeah. So, any other questions for me? You guys have any? You guys have any trades you want me to look at? Here's a swing chart I want to look at for you guys. By the way, we put a trade on Chewy, by the way. Bearish. Full disclosure. Yeah. The option folks got it. You have anything you want to look at? How about Tesla? You can post your names there, the names you want to look at. Okay. PD means is trying to get the data. Okay, good. All right. Yeah, this move here is insane. This one. From what happened to it. And so now we had 1 sigma on the weekly. Yeah. Yeah. It's beginning to slowly top. You can see it slow down, but that news about the split just went nuts. Yeah. Before the move up, so that would be 4 or 5 days ago. That's last time I looked at. P was 147. Yeah. Yes, that's what they're doing. Yeah, that's what that happened. Yeah. 20-1, he said. Yeah. I think. Was it 21 or 10-1? I forgot. Yeah, I think 50 would be too low. Maybe 100 would be good. Yeah, you want 100 would be good. Yeah. Because you go to 50, there's no volatility. It's 20-1, so it would be $50. Yeah, the 20 for $50. Yeah. Yeah, okay. So I was right first. Yeah. Yeah, it's too big. I mean, it becomes too quiet. And it will be widely held. That's what happens. Microsoft did. What Bill Gates did back then was smart. You know? And that time it became very stable because of it went down to like $60, $70 and sat there. In the big moves back and forth, they don't dump it because it's widely held. A lot of people own it. Oh, I would, yes. Oh, yeah. Because we'll split it, yeah. I mean, you're almost too late almost. Because you look how many channels. I mean, hold on. Look here. It's already at 2, yeah. It moved in 1 week. Has moved 1 sigma channel. That's not easy. Yeah, the vols are in. Yeah, about yeah. But it's a split, so you're gonna get more options. They do a split with the options too, right? The strikes, everything gets adjusted. So, yeah. I mean, 2000, that was a very fine strategy. 2000. In 2000, people would for name of the stock to split, they would buy, or suspecting that could be split, they would buy some calls, and the moment the split come, would add to it. You have to do it quick, and then you watch the charts. It explodes, and you sell in the explosion. You buy when nobody wants it. You sell when everybody wants it. Be like Getty, John Paul Getty. Buy when there's blood on the street. You sell. You get a sigma level. Sigmas will tell you when to sell it. Yes. Do I sell? It's an option. You have to. Yes. No. I pickle it. Put in a jar and pickle it. Of course. Listen, I have a blonde here. 9.5 pounds. Admiral Tico. Do you think it's easy to manage a 9.5 pound Admiral? I mean, come on. You're killing me. Hold on. Hold on. There we go. See that? There's a 9.5 pound. Do you think it's easy to manage somebody like that? Yeah. The whole world is his. We just happen to live in it. Okay. Probably have some more of his pictures somewhere, but anyhow, none say handy here. But yeah, he's a. Go to my Twitter. You'll see, or go to his Twitter. Yeah, you can go to his Twitter. Admiral Tico. Yeah. So, very high maintenance. All blondes are. I should write a book. If I write while he made a mistake, didn't print enough, it became a bestseller in the trading space. And then they went to paperback. That was sold out too. Now it's only for my book. There's only is available. Kindle. There we go. Okay, boom. I mean, you can start. There are some used ones available, right? But Kindle is better one to go. But they priced it too high. I told them that's the wrong approach. Why do you know what's your first one? I said, okay, whatever. Now, if I write a book about blondes, it'll be #1 in the 2-3 days on New York Times. Forget Amazon. I know my blondes. Let me put it this way. And this one is a very high maintenance. Plus, but the good thing is that he doesn't talk back. that's an asset. Yeah. Guys, I gotta go. It's getting late. 6:41. Any other questions for me? Anytime, Roger. If you want to test our, any of you guys want to come in, I'm going to send an email out. Thank you, Mohammed. Thank you for helping us here. Appreciate it. And thank you for showing up. Any of you want to test drive the ORB, let me know. We're doing it case by case. We look at what you've done with us and so forth. What we're trying to avoid is the rules who just keep coming for free trials. We don't do that. But we definitely will. Okay. Well, you do talk back. Yeah, well, then, there you go. There you go. Yeah, so you know how I deal with that. Yeah, exactly. But anyhow, good for you. Yeah, if you want to see what we do over there, we're happy to offer you a couple of weeks of coming to the chat. The only thing to chat, the only thing we ask you is that you do an NDA. Sign our NDA, so we're protected, you're protected, and also watch one of the webinars, and then so you can come in armed, ready to go. And Friday would be a good one, could be a good payoff. And there's a webinar to watch and a user guide to read. That's all. So if you're interested, thanks, Dennis. Send us the email and tell us to do what you want. Well, they'll send the email out tonight anyway to that effect, because we do this when we introduce a major new version. 4.4 is major. So if you'd like to come in, welcome to. Let me know, and also we'll send the email out anyway to everybody, and then you can decide from there. Thank you all. See you later. Again, we do this next Wednesday, every Wednesday. You don't need to re-sign up. It's already in the system. So it'll send you reminders. Thank you so much, guys and gals. Thanks, Sherry. Take care.